So after delaying things out, claiming that the Chinese government's going to bail them out, the chairman of Evergrande selling billions of dollars worth of his assets, Evergrande has finally been labeled a defaulter for the first time. So Fitch Ratings cut Evergrande. That's the ratings agency like Moody's and Standard & Poor's. So they're one of the big three here in the United States. So you have Fitch, Moody's, and Standard & Poor's. They just cut Evergrande to, quote, restricted default over its failure to make 2 coupon payments by the end of a grace period on Monday, a move that may trigger cross default, so falling like dominoes for other Chinese real estate developers. The downgrade also came just minutes after Fitch also downgraded the same default label on another Chinese real estate developer, Kaisa Group Holdings, which failed to repay a $400 million bond that matured on Tuesday. So together, the two companies account for about 15% of the outstanding dollar bonds sold by Chinese developers. Again, and I've talked about this at length, this has to do with the dollar tug of war. This has to do with every time the dollar index gets weak, every time the US dollar against other currencies gets weak, you have foreign corporations, especially Chinese real estate developers, trying to borrow more dollars. But Evergrande and the other Chinese real estate developers, and Evergrande was really the poster child for Ponzi financing, accounting fraud, accounting gimmickry, financial engineering. If you talk to a lot of China experts like Jim Chanos and Stevenson Yang, Kyle Bass, Emma Mullman, many others, you'll find out that it was very common knowledge in the China expert and hedge fund community that Evergrande had been doing all kinds of crazy financing, Enron level or worse, pre-sale scams and other things, bribing politicians and bureaucrats to help with pre-sale scams to delay bankruptcy for years. So the fact that they were able to delay being labeled an official defaulter for another 3 or 4 months, not a big surprise, especially with the Chinese government playing games. And look, as you can see there on your screen, how much state capital, how much Chinese government intervention is backing Evergrande. This Bloomberg article, and I'll put a link to it in the information and description section, has a much longer chart talking about the Chinese government's involvement in Evergrande. It is policy for the Chinese government. They want a lot of Chinese people to buy real estate. However, there is definitely way too many houses that have been built. I think there's a 1.5, so I guess it's like one large single family home or one condo and a half a condo. But the average Chinese family, I think, owns 1.5 properties. I think that's the average. So obviously, more affluent Chinese families own way more than 2 or 3 properties. I've heard way more than that. I mean, there's a lot of corrupt Chinese politicians, bureaucrats, and billionaires that own an insane amount of real estate outside of China. But basically, this means that a lot of the other Chinese real estate developers, now that Evergrande has been labeled a defaulter, we could start to see more dominoes fall in the coming months. These things are not happening quickly. Look how long they've been delayed. For the average Chinese person, though, there is still really bad stagflation. There's still a very serious food, energy, electricity crisis in China. The Chinese people have been told by the Chinese government and different agencies to stockpile food. So I think the Chinese government's going to continue to try to import food. Remember, before the pandemic happened, that China had, I think it was back in 2019, the African swine flu problem with their pork population, and it absolutely decimated their pork population. I think over 70% of their hogs were slaughtered and died. So that's a massive wipeout. And then there was panic buying all over the world in Europe, the US, China was buying pork. So that was driving pork prices up. Pork prices for a while in 2021 were also up. So this food, energy, electricity crisis is not going away. However, with falling real estate prices, the pre-sale scam, the credit problems with Chinese real estate developers, and the potentially banks that loaned out, and we haven't heard anything yet on any of the banks that have given out loans to these Chinese real estate developers having any problems yet. I haven't heard any single bank mentioned yet. So I'm assuming that for the state-owned enterprise banks, that the Chinese government and the People's Bank of China are already secretly printing massive amounts of bailout money. Anne Stevenson Yang, who has lived in China, I think for 3 decades or over 3 decades, she runs J Capital. She tweeted out sometime in the last month or two that the Chinese government has been printing nonstop to bail out the banks, and that's also exacerbating stagflation, bad inflation in China, and the food and energy problems. I've spoken with people living in tier 1 cities in China, and food and vegetable prices, meat prices, especially vegetable prices, I've heard in a tier 1 city like Shenzhen, some of the vegetable prices were up 100% in the last 12 months. So there's insane inflation and shrinkflation, literal shortages of some items in mainland China. It's a combination of too much currency and credit being created and then also supply chain problems. So there's both. It's just making things worse with stagflate tax lie. But the bottom line is, with all these problems in China, and then there's the crypto ban for regular Chinese people, we're just hearing reports of massive increases in demand for physical gold in China. There's a lot of videos going around of long lines to buy physical gold jewelry and coins and bars in China. And then also physical silver demand and platinum demand is starting to pick up as well. Finally, if you want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content, research, financial education, and analysis than I provide in these short little free videos, there are now over 190 articles and audio podcasts behind the paywall, exclusive for patrons, all for the cost of a Starbucks cup of coffee per month, only $5 a month. I think it is one of the best deals out there. And just in the last 23 or so weeks, there are now 36 new articles and audio podcasts, including 5 new audio podcasts out in the last 2 or so weeks. 4 of them are very long, 15 minutes or longer, on a lot of interesting topics, including a uranium market update, Q3 earnings for the gold miners, geopolitical risk rising in many countries for mining companies. So there's a separate audio podcast on that, going through the tax problems for miners in specific countries like Chile and Mexico. And then also an audio podcast on Sandstorm Gold, the good news for Hadmaden with the feasibility study and the environmental permits, how construction is going to start at arguably Sandstorm Gold's best asset, and also arguably the best undeveloped copper and gold project on the planet in terms of low cost to build the mine and copper and gold grades. That's a 25-minute long audio podcast. And then I just did another audio podcast today, a short one, talking about tax loss selling for all gold stocks. So we're seeing just massive sell-offs in all gold stocks, including Franco-Nevada, which is the best gold stock, the best and safest gold stock on the planet. These gold stocks are being sold off regardless of what happens with the gold price. The gold price is really not doing anything in US dollars. It's basically flat. And yet the gold stocks are getting sold relentlessly every day here in December. It's a combination of tax loss selling by retail investors and retail traders, and also institutional investors, which are very myopic, very short-sighted, very short-term oriented. Everything is, what have you done for me lately? Everything is, if the recent past returns are not good, they are going to dump something very, very quickly. And we're seeing just a liquidation type phase for even the best gold stocks like Franco-Nevada and others. The baby is being thrown out with the bathwater by institutional investors, from what it appears, before the year of 2021 is over. But that means that January will probably be good, the selling will be over, and things will restart. These underlying businesses are still making, especially the larger royalty and streaming companies, which don't have to deal with higher costs like miners do, they are still minting money, regardless of the sell-offs in the share prices. And again, all of the content behind the paywall is available, over 190 articles and audio podcasts for only $5 a month. So if I could wrap up this short little video very quickly, Evergrande has finally declared default. It was delayed for another 3 or 4 months. Should have happened months ago. The games that Evergrande, the games that the Chinese government, the games that the People's Bank of China played delayed things out. A lot of people, and I interviewed experts on this over the last few months, including Emma Mullman and Kyle Bass, suspected that the Chinese government was going to print and save the banks. We have not heard any bad news yet on Chinese state-owned enterprise banks, but that is probably coming. And now with multiple downgrades by Fitch ratings agency, you're going to see over the next couple months even more Chinese real estate developers that are similar size to Evergrande or larger. There's a one or two larger than Evergrande apparently. Although who knows exactly how much off balance sheet Evergrande has. If you don't believe me, go and listen to the long interview I did with hedge fund analyst Emma Mullman about the accounting fraud that Evergrande gets away with joint venture deals of 49% that they don't list on their balance sheet. They list them off balance sheet. There's going to be widespread defaults coming for other Chinese real estate developers in the next 6 months or less. So this is being drawn out longer than it should, but all of these problems inside China's economy are creating even more demand for physical gold, even more demand for physical silver, and also demand now for platinum.